Hello traders, the title of the video is how to apply Elliott wave theory for fast running stocks in the financial markets. Alright, let's get started. Alright, so I've done my homework already. So this is the first Elliott wave, this is the second Elliott wave, the third Elliott wave, the fourth Elliott wave. We are now in the fifth Elliott wave. Now I'm choosing my word carefully here. We are now in the fifth Elliott wave. It's not yet finished, the fifth Elliott wave. Alright, it's still going until the price starts showing signs of weaknesses. Alright. So now talking about fast running bullish stocks, fast running stocks. Alright. Very often when we count Elliott wave like this, it's quite straightforward. If I switch my time frame to the monthly chart, you understand why I'm using the word fast running stocks. So this is it, you see, it's just going vertical. It's vertical, fast running, bullish stock. The financial instrument that we are analyzing is Visa Incorporated, EPIC V for Victor, belonging to the financial services sector, credit services. Do you use a debit card or credit card? So Visa, data, Visa, all right, here we are. This is the stock, an American stock. So the challenge that we face sometimes with those fast running stocks, you may think that, okay, this is the end of the third Elliott wave, or this is the end of the first wave, but because the stock is running very fast, we are likely to see what we call the wave extensions. So usually in the fifth Elliott wave, when traders say, oh, this is the end of the fifth wave because the stock is just bullish, going fast, people think, oh, we're going to have a correction, and the correction is not happening. And people are wondering what is happening here. Okay, so this is one example here. You can see that also here, they probably formed this triangle here. I will dwell on this a little bit more. Here people were trying to sell because they think that, okay, we are now in the fifth wave. So they say 1, 2, 3, 4, 5. So where I put 1 now, you see this orange one. People see this, all right, the fifth wave. It's not. So here we have, okay, this triangle. So this is the situation that we face very often when we are trading fast running stocks. In my view, feel free to disagree, is that the fifth wave is now extended. So why? Because I'm calling this one from here to here. Pay attention to the orange number 1. The triangle here, this is the second manual wave of the fifth wave. We are now in the third manual wave of the fifth wave. So this is one challenge that we face. The similar situation will occur when we have a fast running, okay, bearish stock. All right. So you say this is the end of the third Elliott wave? No, it's not yet. We see the end of the first wave? No, it's not. End of the fifth wave? No, it's not. And it keeps going on. So how can we handle that? Well, it brings us back to the price itself. So though we are counting waves, so what is happening in the mind of Elliott wave traders? They count wave and they want to time the market using the Elliott wave theory. Nothing is wrong with that. But you don't want to forget simple tools that we use to trade the price action. Talking about what? The trend line. So look carefully here. So I'll say to you, first manual wave or the first wave, third manual wave in a second manual wave or the fifth wave, in a triangle, third manual wave. Where is the fourth wave likely to end? Or is this, look at this candlestick bar here, is this just the fourth manual wave of the fifth wave? Where are we going and what's going on here? How do you handle that? If I connect, you see the top of, hold on please traders, to be to the side. So if you connect this high here, and those are two high here, this one and this one here, you will see something very interesting. So in order to handle, okay, fast running financial instrument that often give headache, so to speak, to Elliott wave traders, we want to start using trend line, paying attention to the price action. You understand what we said before? Interpreting the language of the price first before we apply in the Elliott wave theory. So now that I put that red trend line on my chart, connecting those 1, 2, 3, you can see that last month, the price, you went above that trend line and retested. You have to see the tail. It's not by mistake, that tail, you see that tail? The market knew, the professor you see here, see they have the shadow. They were acknowledging that trend line here. That's how they were handling that fast running, okay? All right? A stock. So in my humble view, if we're going to have the 4th manual wave of the 5th wave, it will happen somewhere in this zone, i.e. price forming one of those candlestick bar, forming a tail to pierce through that trend line here, which is not easy. This is the challenge that we face. We force a tail, that would be great, and then closing back above it, so coming down a little bit below that trend line, forming a tail, and then closing gently above it, or try going a little bit away from that red trend line and then retest it before exhibiting the 5th manual wave of the 3rd wave. But the question that is going to my mind is this the 4th manual wave of that 5th wave that is extended? If that is the case, we will see a reversal at this junction. But we will see. As you can see now, the price is hanging on nicely above that red trend line. That is helping us to combine area wave theory and the price action using, okay, that a simple trend line. Right? The price can also consolidate a little bit in this zone, which means going a little bit horizontal or confined in a triangle in the vicinity of that red trend line before exhibiting, okay, the 5th manual wave of the 5th wave, unless this is just the 4th manual wave of that extended 5th wave. All right, so very simple. So like you can see, if you go back again, because you will come across this and you'll be wondering, oh, is this the end of the 3rd wave? Where is the 5th wave? Especially as you have seen now on the yearly chart, the price is just going vertical. So on the yearly chart, talking about higher degree and lower degree, our first wave of a higher degree is just 1 yearly candlestick bar here. The second wave is a 1 yearly candlestick bar here. And our 3rd wave is ending somewhere here. But on the yearly chart, if you are looking on the yearly chart, you'll see that first wave, second wave, which is this one here, you'll be seeing 3rd wave ending instead here. And so it's 3rd wave, probably you'll say 3rd wave ending here. And this is the 4th wave ending here, and the 5th wave here. All in all, you will definitely say that we are now in the 5th wave, whether you look at it from the monthly chart or the yearly chart. Do you agree here? One candlestick bar extending. So use, okay. So as I've told you before, give precedence to the interpretation of the price action, all right, before using the area wave theory. Use the area wave principle in conjunction with the price action. What is the price doing? Right now, it's breaking a border. So, the point I'm making here, which some traders may say, this is another blah, 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 is that we don't want to use the area wave theory on its own. Draw the lines. So, we can go on drawing more lines. We're connecting now, so I'm drawing another line. This high and this high, so watch it. If a correction is underway, how do we handle it? So suppose the 5th wave has ended down, price going down. Draw those trend lines, the pink one is here. So you will be watching the reactionary price on this on the edge of the pink one. If a correction is underway, that will help you to time the market during a corrective phase. Break below, retest, boom, down, and so on and so on. Again, we can connect again this high here to that low. The price action and the area wave theory, the price action and the wave patterns, using trend line and concentrating on the language of the price itself first. Are you getting it now? So those are the things that you need to do to handle a fast running financial instrument or stock. Though I'm talking here about stock, we are talking about all financial instruments, all right? So I'm drawing another trend line now. Stay with me, please. Connecting this low and this low. We have another trend line. Color that one into black. So we just leave them there. We leave them there. And we monitor the reaction of the price. So my expectation is that, the fourth manual wave or the fifth wave will be somewhere, hold on please, will be somewhere here on the edge of that trend line in normal condition, unless this is the fourth manual wave. I'm using my well carefully here. There it is. Expectation, we will see. And then the real fifth manual wave of that extended fifth wave somewhere there. Will the price do exactly what I'm expecting? Does not have to. Okay? If it's doing what we are expecting, well, we are winning, yes or no. If not, we just follow the price. So first wave, second wave, third wave, fourth wave. We are now in the fifth wave that is extended. First manual wave of the fifth wave, second manual wave of the fifth wave triangle. Now the third, so expectation of the fourth wave somewhere here. And we are the third wave, the third manual wave of that fifth wave is here. First manual wave, all right. Second manual wave, third manual wave, expectation of fourth manual wave here, unless this is already the fourth manual wave, and the fifth manual wave of the fifth wave. We will see. Draw all the trend line, concentrate on the price action, use the area wave principle, the area wave patterns in conjunction with the price action. If you have any question or suggestion, put in the comment section, and in due course I will be recording another video to answer your specific question. If you like this video, please give us the thumbs up. If you dislike it, don't go away, mark it down, and that will put us under pressure to improve our next recording. If you think that this is an essential tutorial, do not hesitate to share it with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to apply area wave theory for fast running stocks in the financial market. Happy trading to you all, and speak to you soon.